Ever wonder how to build a secure financial future? Well, you're not alone. We all dream of a stable, worry-free life where money isn't a constant concern. And believe it or not, that's not as far-fetched as it may seem. Today, we're going to talk about a crucial piece of that puzzle: financial security. But what does that mean exactly? In a nutshell, it's about having enough resources to cover your living expenses without the stress of paycheck-to-paycheck living. Sounds good, right? Now, let's talk about something many people find intimidating: investing. Rather than a high-stakes gamble, think of it as a long-term plan for your money. It's about putting your cash to work in ways that could potentially yield more returns over time. So, whether it's stocks, bonds, or mutual funds, investing is a key component of financial planning. Stick around as we unravel the basics of investing and how it can lead to a financially secure future. So what exactly is investing? Well, let's imagine you've got a seed. You could eat that seed right now, or you could plant it, water it, and wait. Over time, that one seed could grow into a tree that gives you many more seeds. This is the essence of investing. It's about taking what you have now, putting it to work, and letting it grow over time. Now let's translate that to the world of money. Investing involves allocating your money, or planting your seed, with the expectation of some benefit in the future. This benefit, often called a return, comes in the form of increased value, or income. Your money isn't just sitting in a bank account, it's out there working for you, growing and multiplying. There are different ways to plant your seeds, or in other words, different types of investments. Let's talk about a few of them. First up, we have stocks. Buying a stock is like buying a small piece of a company. As the company grows and does well, so does the value of your piece. Next, we have bonds. When you buy a bond, you're essentially lending your money to a company or government. In return, they agree to give you your money back with interest after a certain period of time. Finally, we have mutual funds. This is like a basket of different investments. It could contain stocks, bonds, or other assets. The idea here is that by spreading your investments around, you can balance out the risks and rewards. The goal of investing is to create wealth over time. It's about having your money work for you. It's about planting those seeds and nurturing them to grow a stronger, healthier financial future. It's important to remember, though, that investing is not a get-rich-quick scheme. It's a long-term game, and patience is key. Now that we know what investing is, let's delve into how it works. How does one go about investing their hard-earned money, you might ask? Well, let's dive right into it. The first step in investing is defining your financial goals. Are you saving for a new house, your kids' college education, or perhaps your retirement? Your goal will determine what kind of investments you should be making and how much risk you're willing to take. Always remember, the higher the potential returns, the higher the risk. Now, do you want to go on a roller coaster ride or a leisurely stroll? That's the next step: understanding your risk tolerance. If the thought of your investment value fluctuating makes you lose sleep at night, then high-risk investments like stocks may not be for you. On the other hand, if you're the daredevil type who thrives on taking risks, then by all means jump right in. Just make sure your parachute is ready. The third step is to consider your time horizon. How soon do you need the money? If you're investing for a goal that's 20 years away, you can afford to take more risk because you have more time to recover from any potential losses. Once you've got these three things sorted out, it's time to choose your investment. Stocks, bonds, mutual funds, real estate, there's a buffet of choices out there. But remember, don't put all your eggs in one basket. Diversification is key. Spreading your investments across different asset classes can help reduce risk and increase potential returns. Now, before you take the plunge, do your homework. Understand the market, the industry, and the specific investment you're considering. Knowledge is power, and in this case, it could also mean more money in your pocket. And that's it. That's how you go about investing your hard-earned money. It's not rocket science, but it does require careful thought and planning. Investing might seem complicated at first, but with knowledge and understanding, it becomes a powerful tool for financial growth. So let's move on to the next scene where we will discuss retirement planning and investing. Stay tuned. How does investing tie into retirement planning, you may ask? Well, let's break it down. Investing is like the fuel that powers the engine of your retirement plan. It's the process of allocating money with the expectation of receiving more money in the future. And when it comes to retirement, this future is the time when you'll want to kick back, relax, and enjoy the fruits of your labor. So, how does investing provide a steady income during retirement? Think of it this way. When you invest, you're essentially buying a piece of a business, a bond, or a mutual fund. Over time, these investments can grow in value and generate income. For instance, a stock might pay dividends, a bond might pay interest, and a mutual fund might distribute capital gains. These payouts can be a vital source of income when you're no longer working. But here's the catch. Investing isn't about getting rich quick. It's about growing your wealth steadily over time. And that's why starting to invest early for retirement is key. The earlier you start, the more time your investments have to grow. And thanks to the magic of compound interest, your earnings can generate even more earnings. It's like a snowball rolling down a hill, getting bigger and bigger as it goes. Now, let's talk benefits. Investing early for retirement can help you achieve financial independence and security. It allows you to take advantage of the power of compounding, which can significantly boost your savings over time. Plus, it gives you more flexibility to handle market ups and downs. Remember, investing is all about the long game. So there you have it. Investing plays a crucial role in retirement planning. It can provide a steady income during your retirement years and offer financial stability. But remember, investing is a marathon, not a sprint. The earlier you start, the better off you'll be in your golden years. What are the risks involved in investing and how can they be mitigated? That's an excellent question. In the world of investing, like in many areas of life, greater potential rewards often come with higher risks. One of the primary risks in investing is market volatility. You see, the value of investments can go up and down. Sometimes these changes can be quite dramatic and rapid, leading to potential losses. But don't let that scare you off. There are ways to mitigate these risks and make the volatility work in your favor. Diversification is one such strategy. By spreading your investments across a variety of financial instruments, sectors, and geographic areas, you can reduce the impact of a poor-performing investment on your overall portfolio. Think of it as not putting all your eggs in one basket. Another strategy is asset allocation. This involves dividing your investment portfolio among different asset categories, such as stocks, bonds, and cash. The goal is to balance risk and reward by adjusting the percentage of each asset in your portfolio according to your risk tolerance, goals, and investment time frame. It's also vital to remember that investing is not a one-size-fits-all proposition. Each individual has unique financial goals, risk tolerance, and time horizons. Therefore, it's crucial to tailor your investment strategy to your personal circumstances and objectives. This brings us to the importance of financial education and consulting with a financial advisor. Don't shy away from seeking professional advice. A good financial advisor can help you understand the ins and outs of investing, guide you in making informed decisions, and assist you in crafting an investment strategy that suits your needs. Remember, investing is not about getting rich quick. It's about steadily growing your wealth over time, securing your financial future, and achieving your financial goals. It's a journey, not a sprint. So, take your time, make informed decisions, and always keep learning. Knowledge is power. The more you know, the better you can navigate the investment landscape. So, equip yourself with knowledge and take control of your financial destiny. Let's recap what we have learned today. We've unlocked the secrets of financial security, understanding that it's not just about making money, but also about making your money work for you. We've learned the ABCs of investing, diving into the world of stocks, bonds, and mutual funds. We've discovered how investing works, realizing that it's a long-term game, not a get-rich-quick scheme. We've delved into the importance of retirement planning, acknowledging that it's never too early to start. We've also explored strategies for managing investment risks, recognizing that while investing inherently involves uncertainties, there are ways to mitigate these risks and protect your hard-earned wealth. The world of investing may seem intimidating, but remember, it's about taking one step at a time. You have the knowledge and the tools to secure your financial future. Remember, the journey to financial security starts with a single step. Take that step today.